Virat? No, Rohit is way better than him. Hi guys, this is Srijan, and today we are going to discuss one of the most debated topics of all time. Arey nahi, it's not a Rohit versus Virat debate again. Today we are going to talk about one of the most exciting topics of the Indian stock market. Who do you think makes more money into the stock market? A trader or maybe an investor? Well, stay with us till the end of this video and you'll know who makes more money in the Indian stock market. Trading, also known as speculation, and investing both involve seeking profit in the stock market, but they pursue their goal in different ways. A trader jumps in and out of stocks within weeks, days, and even minutes at times with the aim of short term profits. They often focus on a stock's technical factors rather than a company's long term prospects. What matters to a trader is in which direction the stock will move next and how the trader can profit from that move. Investors, on the other hand, have a long term outlook. They think in terms of years and often hold stocks through the market's ups and downs. Let's try to break down the whole concept with the help of an example. I believe the world of sports and stock market have a lot in common. And being an Indian, I'll take the liberty of drawing comparisons between cricket and the Indian stock market. For me, the equivalent of short term trading and long term investments would be batting in a T20 match and a Test cricket match, respectively. Both of these disciplines required completely different skills and mindsets, and very few people have been successful in juggling both the fields. I know the picture which is coming to your mind when I talk about both T20 and Test cricket simultaneously. And no matter how boring a player looks while playing Test cricket, it is his ability to leave deliveries, playing risk free cricket, and adapting to different situations that stands him in good stead. Test cricket, like investing, is all about planning, analyzing, and utilizing all information around before taking a decision. On the other hand, in T20 cricket, you have to be restless, attack, make impactful contributions, and have the ability to ride your luck when the momentum is right. You also have to quickly access a good score for a particular pitch to plan your innings. T20 cricket, like trading, is about predicting short term flows and taking decisions without the luxury of having all the data points. And just as a T20 player scoring a quick fire 30 will be as valuable as a player scoring a patient 150 in a test cricket, gaining 2 or 3% in a day while trading would be as valuable as doubling your returns over 2-3 years while investments. Now, as a beginner gets attracted to T20 cricket because of the glitz and glamour associated with the sports, one is easily lured to trading because of the stories that are floated around the market. Talking about my philosophy personally, I've realized that trading is not my cup of tea. With all due respect to the traders, the technical indicators which are used in trading can go down the gutter with one good or bad news. So, trading can be highly risky and not reliable for creating a good source of passive income. Trading, as I've always told you, can help you earn short term profits, while investments can help you create long term wealth. Now, let's quickly try to understand a few differences between trading and investment. The aim of investment is to create wealth over a longer period of time by buying and holding. Trading, on the other hand, is all about generating profit by frequent buying and selling of stocks. Traders are usually trained to take action when the game of probability is high in their favor. The holding period for investments can last up to even decades, while if you talk about trading, the holding term is very short and it can vary from a week to maybe even minutes. The risk factor is obviously very high when we talk about trading. On the other hand, if we talk about investments, there is a low risk factor. We can expect a return of up to 15% if we talk about our investments, while on the other hand, trading can give us a return of 8% per month. Now, talking about the tax pattern, there is a rebate of up to rupees 1 lakh given in investments, whereas there is no rebate given in trading. The tax pattern is 10% for investments and 15% for trading. Now, if we talk about the brokerage charges, then there are no brokerage charges involved in investments due to buying and holding of stocks. Whereas, if we talk about trading, then there is a high brokerage fee due to frequent buying and selling of stocks. Now you must be wondering as to what shall I choose between trading and investments. See, trading and investments are two different aspects of the stock market which requires different skills out of a person. The first one is differing time commitments. Trading stocks is much more time consuming and frantic as compared to making investments. In the case of investments, once you have made sound investments, you can simply relax without buying or selling for months and maybe years. Second, minimum capital requirement. The cost involved in trading is usually high as every time you trade a stock, you'll have to shell out a certain fees. Hence, your returns need to be comparatively higher to cover up those costs as well. On the other hand, if you talk about investments, then you'll obviously lower down these costs, but then the returns will also be comparatively lower. Number 3, risk appetite. See, long term investments are for those people who want to make money but avoid huge losses. You could earn a decent return by reinvesting your dividends and leaving your money in the market for the long term. But for a trader, you have to do frequent buying and selling, and that's when the risk is high, but then again, the return is also high. Now, one can clearly choose one thing between trading and investment, but there is definitely a problem with doing both of these things simultaneously. What when the investments don't go as per our plan? It is when some of the biggest errors happen. People tend to confuse the investment approach with the trading one and head towards danger. When the stock price is doing well, neither the trader nor the investor has any problem. But what happens when it does not? Let's say the stock price starts falling. Now, as a trader, you would have an escape to avoid the small losses becoming big ones. Since as a trader, you're not emotionally attached to a stock, you'll get rid of it at the current point of time, and it is rightly what a trader should do. But there is a problem in this case. If you decide to keep the stock and you do not want to give up on it, so here the trader has become an investor who does not have enough information on the company to make a decision of holding that stock or maybe letting it go. So as an investor, you would be working on the guess. Similarly, being an investor, you're not supposed to sell off the stock when the prices go down, but believe in the fundamentals of the company. See, it is okay to be either a trader or an investor. Just don't try to be both with the same stock. Investing should be more like watching paint dry or watching grass grow. If you want excitement, take maybe 10,000 or 15,000 rupees and go to Vegas or maybe Goa in case you are low on budget. Just don't put your hard earned money blindly in the market and blame the market for your losses. So, summarizing what we've learned today, traders are the one who take advantage of the market conditions by frequent buying and selling of stocks, whereas an investor strives for large returns over a long period of time by buying and holding stocks. Number 2, one should choose between trading and investment depending on their risk appetite, time that can be spent in the market, and the kind of capital that they have. Number 3, don't try to get into two boats at once, else you would end up losing both. Choose one between investing and trading. It is not much of a concern that you are trading or investing, it's just that you need to be engaged in a chase that suits your personality traits, capabilities, and philosophies. So, I'd like to end the video by giving you a call to action. Go on Google and search about the percentage of traders that lose money in the Indian stock market. I bet that most of you would end up surprising yourself. So I hope you guys enjoyed the video as much as I did while recording it. So that's it guys. वीडियो अगर अच्छा लगा तो लाइक कर देना और हमारे चैनल को सब्सक्राइब भी कर देना. Basically, this video is a part of the basic stock market course that we have created. You can click on the I button to watch our other videos as well. So thank you guys for watching the video. This is Srijan Barnawal signing off until we meet again.